All right. Welcome back to the channel, everyone. Today, I want to talk about increasing profits, okay? Because it's a question that I receive from time to time, and people ask it in different ways, but they really want to find out how can they stay in a trade longer to get more out of the trade, to get, a bigger bang for their buck in a sense once they enter a trade versus just kind of scalping for a few ticks. Yes, for me, it is a goal of mine. I've said this in so many videos before because, look, as traders, as we're going through the process and learning how to trade, and then we know how to trade, and then we start to trade, we take steps, right? Because smart traders are not going to go for the full gusto and just, the moment that they're going through that trial or going through that process of learning how to trade. A smart trader is going to take steps to build up, to build an account up, to learn a strategy that works, because they want to prove to themselves that they can be consistent each and every day in the markets, right? But I've been trading for over 10 plus years now, and I say this, as traders, we are always what? Always learning, and it's a good thing to always go back and continue to educate yourself all the time. I'm always researching and looking at, information online, and from time to time, people will share the strategies with me, whatever the case is. And me personally, once I find something that works, I'm going to stick with it, okay? I don't like to deviate from it because then I may forget some things, whatever the case is. But my goal, what I'm really trying to get at here is, yes, me, myself, I've said it, that I want to be able to increase my runs, to be able to increase my profits at the end of the day. But I'm not stuck on looking at my P&L, every second, during the trade session, whatever the case is. So let's kind of talk about that today and how you as traders, if you regardless if you're a beginner trader, intermediate, or experienced level trader, what can we do as traders? Okay, what can we do as traders to increase our profits and get a bigger run? Okay, so let's talk about that. Watch the intro. We'll jump right into it. Okay, so you guys know I've talked about wanting to, work on my own trading, my own self, and be able to get more out of a trade, okay? Because what does it do in the end? It allows you to have, instead of taking multiple trades, say, taking 5, 6, 7, 8, 9, 10 trades, whatever the case is, sometimes you just have to be able to, or not have to, but sometimes you just are able to just take 2 trades and be done, right? Sometimes just 1 trade. There are individuals, even in our Discord community, that focus on just looking for that one setup that allows them to profit pretty well in the market and be done, right? Take home their purse, take home their money, take home their, the profits and be done. That's the goal in a sense, okay? But there are a lot of greedy traders out there as well, and that's something that people are going to really have to work on if you get into this business. You're a greedy person. You got to do away with that, guys. That's part of psychology. That you're going to have to really just smash and put behind you, whatever the case is, because if not, you're not going to be able to move forward. If you're greedy and you keep taking trades back to back to back, you're going to lose at some point, okay? And all those gains that you made, it's going to take one good trade and you're going to, find yourself in a bad situation to where you're going to lose everything. And gracious, I'm going to tell you, I see people all the time, they drop comments, they send me DMs, they're up and down in their trading, they had a good day today, and tomorrow I have a bad trade. It's kind of flip-flopping back and forth. I think people need to have to really work on their psychology piece, work on themselves, okay? And that's something as traders we can't tell or teach or someone how to, manage or control themselves. It's a personality thing, or it's a personal or conflicting issue on the inside of you, upstairs here mentally, that you're going to have to really control. But for me, I put things in the past. Yes, the fear piece is always there for most traders, whatever the case is. But you got to figure out and fight your own battles in a sense, all right? But let's get to kind of the nitty-gritty of what I was talking about. For me, I want to be able to increase my profits. And I'm sure a lot of you guys want to be able to do so too. And the only way, I'm going to tell you, the number one and the only way to really do so is to really just wait and be patient for the best setup or opportunities that unfold. You guys know by now that follow the channel or who have subscribed to the channel. And if you haven't subscribed to the channel, shame on you. Go ahead and take the time to subscribe to the channel now, guys. Look down at that red button down below that says subscribe. It's right there in front of your face on the screen. Click on it, okay? Do yourself a favor. this channel here is packed with great information that I'm sure is going to, that you'll find value in, and that will help you along your way, especially if you're a futures trader, okay? So go ahead, subscribe now. Okay, so the way you're going about doing it is really be patient, okay? Waiting for the right trade opportunities. I am a supply and demand style trader, so I'm taking my trades where at areas of supply and demand, okay? But the biggest thing I always tell you guys to do, the thing you need to do up front is what? Be able to read the market. Be able to follow market structure, okay? Looking for the ebbs and flows and see if it's breaks of structures, whatever the case is. Look, when the market is moving in a certain direction, either up or down, and then it takes a break, and then it takes it pivots and breaks structure to the downside, or to the upside, it's creating a break of structure, leaving behind, like I always say, an area of supply or demand. Okay? So you look for those areas. But the key to it really is to define good areas to take trades from, to where there's a gap in the market. Okay? An area where price breaks structure, leaves behind a gap, and you got enough area, once price gets back to it or retraces to that area, to that zone, to that supply or demand zone, to be able to take a trade from. Okay? All right, that micro scalping, stance of just looking for, on a lower time frame chart, say for instance, okay. I tell you guys, do not trade this from a four range chart, or specific from a 1 minute chart, or whatever lower time frame you're using. If you're doing that, you're going to find yourself getting into a dangerous habit, and it may work a little bit, it may work a couple times, but then you'll get slapped on the hand pretty hard, okay? So the thing about it is, if you're going to trade like how I do, most times I trade from my 12 range chart, at least understand market structure and be able to read the market and know, even from a short-term basis, look for those short-term moves, okay? Even if the market is not in confluence with the higher time frame sometimes, I still take trades. You know, the market could be moving to the upside, and you find me taking a short, right? All right? That's because I'm looking at market structure, what's going on my 12 range chart, and kind of focusing on to see if I can, capture an opportunity in the market to where there's enough area for me to take a trade back to, especially if I got a decent gap. You know, the market's moving to the downside, say for instance, breaking structure to the downside, and it's made left behind a nice gap to the downside that hasn't been filled yet, back to that area of supply. When price gets back to it, it's a win-win opportunity for me. And I'm going to show you an example of this over night, to where I stayed up last night. It was probably about 10:30 or so. The trade didn't actually unfold or take place, meaning that I didn't see the break of candle, or the break of candle didn't happen until around about 11:15. By then, I was already laying down, getting my rest for the night, okay? So just as an example here, I'm going to show you, all right? Yesterday evening, and prior to the market actually closing, I'm going to show you this, okay? The market made a run to the downside yesterday, right? I believe this was the low of yesterday's trading session right here around 38.22. Yes, it was, okay? But then it moved back up to the upside, okay? All right, and that happened around about 11:30 yesterday, where it made that low at. Then it started making higher highs and higher lows. It did not break above, move this down, above this area right here, okay? All right, to make a new high in a sense, all right? To take out, I should say, to make a new higher high on this move to the upside. It didn't take this area here out, okay? But what it did do was make a lower high, and then a new low here. So it didn't take out this low, it didn't take out this high right here. It kind of just moved sideways at this point here, okay? But it did make higher highs and higher lows on the move back to the upside after imprinting this low here yesterday. But what I saw here was price, basically creating structure as it was moving to the upside. Okay, so we first saw we get that, right? All right, so price made a high here, right here towards the tops, okay? But when it got up to this point here, towards the close of yesterday, it made a high here, it pulled back, it made a new high here, right? Then the market flipped. It turned, started making lower lows and lower highs. It took out structure right here. But look what happens. Look what happened. All that was a pullback, okay? A slightly deeper retracement, just for price to push higher, okay? So at this point, when price did that, we broke structure to the downside right here, and then taking out this prior swing low here, and then turning back around, pushing up, right? Breaking structure, creating a new swing to the upside, which it took out structure here, which means it broke structure to the upside. All right, so when price did that right there, I said, okay, price is setting itself up and we're going to see what happens. If it folds back around, turns back around, and takes out now it's created a swing, a high here, a lower high, and a higher high here. If it turns back around after making this taking action right here, what it did, or making this structure where it pushed up, pulled back, pushed higher, boom, broke, pushed down, broke structure here, just to turn back around to re-break structure back to the upside. Okay, right here where it made a swing, and then it turns back around and starts pushing lower. You see what it did? It took out structure at the bottom end of this low right here, right at 35.5. So when I saw that happen on the force or the push to the downside right here, and took out this area structure, what happened right here was a nice solid aggressive selling to the downside, where we got a nice gap. Okay, and this area to fill. When I talk about gaps, I'm talking about the area in which price has not returned back to the zone, supply zone here, and it left a nice solid gap area to fill. So my focus, this year, say for instance, I want to be able to improve and be able to stay in my trades longer, and I've been working on that, and it's kind of studying how I can be able to do so, right? So moves like that, I'm gonna pay more attention to greater moves in the market now. Remember how I tell you guys, I said higher probability trades. This is a high probability trade setup right here. Okay, one, because the market didn't immediately come back to this zone here. Okay, after gapping down, meaning leaving a gap fill area with all this aggressive selling to the downside. You must understand what's going on here. Okay, what's going on here is that banks and institutions have taken a ride to the downside, have forced the market to push lower. Okay, only when you see massive moves like that. Look, retail traders aren't making these type moves happen. These are the banks and institutions filling sell orders. Okay, and when you see a massive gap like this to the downside and leaving, where it's not filled yet. So when price made this move to the downside and took out this area structure right here, look, it left behind a major gap to be filled. I'm gonna show it to you. All right. From this area where this low is right here, the bottom of that green candle right here, this was the gap to be filled. So to me, when I see something like that, there's enough space, enough opportunity for me once price returns back to this area right here. Again, once price returns back to this area, retraces back, I'm looking below me as well. I got to start following price action when it's moving to the upside here, okay? To see how much space or room below me I would have to take the trade back to, meaning if there's an area of support below, okay? So when price returned back to this area right here, okay, this is supply zone, after making this aggressive selling, which it had not filled yet, I said, okay, price gets back to this zone right here. I saw this area right here below. This is an area of support below, right? Okay, so price, after it made this nice move to the downside here, it started turning around and making these small little higher highs back up to the upside, basically meaning we were tracing back to the supply zone, right? But still, there was enough area here that what price had from that aggressive selling to the downside for me to capitalize on a sell opportunity, at least back down to this area of support below, correct? So yesterday evening, I stayed up, like I said. I waited for it, price to, kind of break below this candle right here, or at least the body of it. And I had, I was right here where this red candle was at, and it closed to the downside, but still we didn't get a break of candle, right? So I was like, okay, I'm not going to sit up all night. And I knew what it was going to do. And so, I could have put a limit order or two on, or whatever the case is, a limit order, and put a stop and, went to bed or whatever the case is. And I should have done that, but I didn't, because I almost knew what was going to happen here, because this complete area here was untested. But what I'm getting at here, the way to be able to, get more bang for your buck, whatever the case is just wait to see. The greater the gap, and price pulls back to the zones, just paying attention to price action as it retraces back, the more opportunity, or the greater opportunity you're going to have for one, it being a higher probability trade setup. But as well as if you got a gap from as here when price went to the downside, but then when price retraces back and you still got a nice gap right here from the next area below where the support at, that tells me that, hey, I got opportunity to take this trade, which I would have taken the trade right here at 45.25. It did pull back about 4 points before pushing lower, but that's what's just where you stay in trade. You got to be able to be disciplined and understand what's going on, and don't chicken out. Stick with it. We all kind of chicken out sometimes because that fear factor steps in. But look, regardless if you put your stop right here, you see what they did? They retraced the market or pushed the they pulled the market back right here to do what? To stop traders out, because they know people probably got into the trade as well aggressively, very aggressively the moment price tapped into the zone and went short. Like that's why I normally wait for a break of a candle. And even on a break of a candle, you know, on the 12 range chart, and the higher that you move up on a chart trying to trade from just one particular chart in itself, you know, you're going to probably get some pullback. You see what happened right here. Sometimes price will break this candle and keep just moving solid to the downside. And sometimes it'll break this candle and it'll pull back a couple points before it moves in that direction. But that's where you have to be confident, like I'm saying, and knowing exactly where to put your stop. If you want to put a hard stop, knowing where to get out at. See, that's why I say, do not put your stop tick to tick right on the back end if you entered right here, because more likely you may have got swiped right there and got stopped out. Give it a few ticks room, you know, above this last candle or this red candle to the downside, the first red candle, or put your stop on the back end of the area of supply. Okay, most times that's what I'll do. I'll put it right here on the back end of this area of supply, even though, you know, yeah, that's a decent sized stop there. But you've got to be able to have confidence and understand. Plus, you must understand that you must have the capital to be able to weather the storm if you're trading from one particular or one solid chart, you know, and not kind of like waiting for or the best setup. Meaning, like what you could do. I'll show you an example of what you could do here if you using the pair charts. Okay, so we'll talk about that just real quickly because to see what happened on the full range chart at the situation here last night. Well, not situation, but on the scenario here last night. But I'm in the trade here at 45.25. That's why I would have got in at, okay, guys? And taking it back down here to my first area or first run to where support is down here to 38 and let's say 38.5, okay? So that would have been a nice move right there. We're talking about 45 down to 38. That's like 7 points right there, okay? 7-point move right there. I would have capitalized on that. And you guys saw yesterday and the day before, a couple of days, you know, since the beginning of this year, I've been working on my work has been on, my focus has been on, and my goal this year is to be able to look for greater opportunities to be able to get more, you know, more for my money in a sense on every trade that I get into. All right, the micro scalping, I'm going to, you know, if I see small opportunities, I'm going to take those opportunities, but I really want to focus on getting a more or bigger bang for my buck this year because, again, another goal of mine is to increase my profits or increase, you know, over what I made last year. All right, that's just the goal and all. You know, everyone wants to be able to make more capital or more money and scale up every year, right? So that's the goal too. But yeah, that was a solid trade there. So what I'm trying to tell you to do, if you want to be able to increase your profits, look for greater, higher probability opportunities where you got larger gaps, you know, for the market to fill. And I'm gonna show you another example right quick, just as a point of reference. Let's look. This was a trade I took a couple of days ago, like right here. All right, so what we saw right here, I'm just gonna run this down. Price moving down right here before pulling back here, but on the pullback right here, basically what price was doing was making lower lows and lower highs to the downside. Got a nice retracement. It did. Looks like it. Let's see. It broke this area of structure right here when it pushed to the upside here, but then it turned back around. If you noticed. And started making a move back to the downside. So it basically made a low here. So it made a low here. It made you could classify this as a higher high if you want to because it broke this area right here. But on a pullback right here, made a low here, boom, pull back, broke lower here. Okay, so what it did on the downside here, you can see that it made a run here, a low, lower high, and broke lower, taking out structure right here. So a swing to the downside, okay? All right, but what I'm trying to get you to focus on here is that when price turned back around, started breaking structure back to the upside, it broke back within this swing right here. It took out this area right here where there's a swing, which I call this a supporting swing within the larger swing here. Once price broke above this area right here, and that's why I marked this off to show you here. I got it circled there. There was, look at this area right here. There was a gap from the top here, okay, when the price pivoted to move back to the downside and took out structure right here at the bottom. There was a gap right here where price did not come back up to this area yet and tap into this pretty much area of supply in a sense up here. Again, this is the pivoting point, the pivoting mark where the aggressive selling started at. And that's primarily what I like to focus on all the time is mostly try to find those areas where the pivot started at. You know, not pivot started at. Well, yeah, the pivot started at, meaning where the aggressive buying or selling took place. And that's where you're going to find your demand and supply zones. Remember I said supply and demand is always tucked back within the swing, within the swing, not at the neck or throat of a swing or the bottom or end of a swing, depending on if you're taking, how the market's moving, if it's moving up or down, okay? So that instance like this would be a push down, pull back, break lower in a sense, right? And this, once price broke lower, this would become the bottom end of this swing to the downside, okay? But let's get back to what I'm focusing on here. Once price broke this area right here, there's plenty area to fill right here, okay? So when I saw that right there, once price started making higher highs and higher lows back to the upside, breaking back into the swing, took out this supporting swing area here, boom, it pushed up, broke above this area here, pulled back, okay? I'm not going to jump right into the trade just yet. I still want to get some confirmation. It pushed up here, forming a swing to the upside. Once it pulled back and I saw that it didn't want to break lower, meaning a break of a close of a candle below the swing, okay, meaning taking out the swing right here, I went long, okay? And my aim or goal was to definitely take it back up to at least here at 76.25. So because there's plenty of gap to fill here, all right? So you get in, say for instance, price pulls back here. Let's see where we get in. You get in right here at the break of this above this red candle right here. So you want to get in here at 65 and say 3/4, 65.5. Boom, take it back up to 76. All right, nice run. Those are the type moves that I'm looking for, is where there's a bigger gaps in the market, where there are a supply and demand resting at. Okay, so the larger the gap and the area filling back or moving back to supply or demand is where, for me, that's just higher probability, greater opportunity to be able to get into a trade that's going to give me, like I said, more bang for my buck. Okay, but let's go back to this trade right here that I was wanting to show you, and we'll wrap this up here. The trade that I wanted to, I was talking about yesterday evening, or pretty much early part of this, well, yesterday evening, because yeah, it happened around 11 something last night. Okay, so like I was saying, a lot of people have the fear, that fear sets in to where once they get into a trade, so you take the trade here at 45.25, and then price pulls back on you 4 points. They don't want, they jump out. They think the market is going to push higher, okay? And it's a possibility it could. But the thing about it is that you have to be confident in your trade. So if you want to try to use this the paired chart approach, let's take a look at it on the 4-range chart. I haven't even looked at it yet, so I want to see myself. If this would have gave us more confluence, more opportunity, and scaling down possibly to be able to more to give us a more fine-tuned trade, okay, to where we're not taking on as much risk and the market not coming back against us as much, okay? So let's say here once price broke below 45.25. Oh, better yet, let's do this, because the way I show the strategy is wait for price to pull back, in this case here to the area of supply, right? Once it taps into the area of supply, then we're looking for a breaker structure on what? The lower time frame chart. So let's look over the 4 range now. And that was 11:40 last night, okay? Actually, 10:40 last night, okay? When it tapped back into the zone. So let's go down to the 4 range. Okay, so on the 4 range, this is that 12 range demand, supply area price taps back into right here, same area, okay? Now, we scale down, price tap back into the supply zone, and we're looking for now a breaker structure, right? Pretty much a break to the downside, meaning price turning, pivoting, and starting to break levels to the downside. So price breaks right here, taking out this area right here, small little swing, pulls back. If you went short right here, the break of this green candle to the downside right here, meaning the red candle taking out the body of this green candle, right here to close as 46, it pulls back and then pushes lower. So at 46.25, it pulls back some, about a point and a half, point and a quarter, whatever the case is. But if you got in at 46.25 and it ran down to here, then you picked up about 2.5 points right there before it pulls back. So still, and that's what I said in other videos before, is that on the 4 range chart, once you get into a trade, it gets choppy and you may get like maybe 2-3 points out of the move, whatever the case is, before it taps into, an area of support, say for instance below it. We don't see this area here on the 12 range chart. So that's why if I'm trading from the 12 range, I have to expect that there's going to be pullbacks when I get into a trade, and I must be able to weather that storm before it intends to move my direction. But if you're really trying to get more confirmation and looking to really what I call micro scalp the market with using that paired confirmation or paired chart strategy that I talk about, since the beginning of this channel here, still this opportunity kicked off and gave you, if you got in here at 46.25, it pulls back, like I said, about a point and a quarter, and it runs down here into support, say for instance below, and you get out at 45, pick yourself up 2 points and a quarter, whatever the case is. All right, still that's pretty much almost guaranteed right there. All right, yeah, and if you know how to stay into the trade, even on trading, once you scale down on the pair chart, which is the scale down chart here, the 4 range chart, just use it hand in hand with the 12 range chart. Your higher time frame which you have it paired with, to be able to see, okay, all right, looking below me on the 12 range chart, go back to the 12 range. All right, I don't see anything below until we get down to around 38 and a quarter right here, right? But on the 4 range, you see so many little micro swings. All right, you got support resting down here, and then this was the area to get out at right here on the 12 range. Okay, but the 4 range shows you more swings. Okay, shows you more supporting areas where price could pause at. All right, so use the 2 charts paired hand in hand. Okay, 12 range is showing me one thing. If I trade off of that, I look for the rejection off of that, and then if you want to, like I said, you can micro scalp, take the trade on the pullback here. Wants to break this little small swing here or area structure, break a candle to the downside, go short, taking it back down here. So you get in around 46 and a quarter or 46 and a half, take it back down here to 45, 40, whatever. 45 and a half, 45 and a quarter, whatever. And pick yourself up, like I said, 2 points and a quarter, whatever the case is. At least 2 points move right there, all right? So, that's using that period chart approach if you were trying to get in on a more fine-tuned trade and not wanting to take on so much heat when it comes to, the market retracing back. But a lot of times that may not happen, that's what I'm trying to say. A lot of times, you'll see the market, once it breaks that candle there, it's just going to start moving. But you got to also understand too, we're talking about in the overnight session, low amounts of volume there. We're not even into the London session where there's more volume, more opportunity in a sense. So, but either way, what I'm trying to say here is that if the trade still worked out, get out if you're trading off this chart here down to 38.5. All right. So that's the way that I'm looking forward and moving forward, trying to identify and focus on increasing my profits, and allowing my traders to run in a sense, basically being able to accumulate more points in one trade versus just a, point and a half, 2 points, whatever the case is. But doing so, if you're using that Pierce chart strategy approach, it does give you more confluence, more confirmation. You're just going to have to use it hand in hand each and every time. And, in this case, you can actually stay in that trade that I showed you off the 4 range chart. If you come back and pair it with your 12 range chart and just see what's going on here. Okay, there's nothing on the 12 range till we get here pretty much. But understand the 4 range, price could pause at one of those little micro swings, pull back before pushing lower. So if I saw this on my 4 range, like right here, once price rejected that area right there, we got down to this area right here. I said, okay, price pushed down, pull back, broke lower. We got a pullback here, okay? And it did take out, it pushed a little bit higher here and took out this high right here when it moved back to the upside. So, if I was trading like that, I probably would take my profit and been out the market. But once I see an opportunity where price continues to move to the downside, push down, pull back, boom, broke lower, taking out area right here. There were, you could have continued basically running the market to the downside because of the fact that the price was moving lower, making lower lows and lower highs. Okay, so you have to be able to follow price action and understand the direction in which the market is trying to attempt to move. All right, that's just being able to read market structure. All right, but that's all I have for you guys today. I hope you found some value in the video. It is a working process, and I see it all across the board. A lot of people are, traders. That's our goal, is to be able to increase our profits by staying in the trade longer, being able to, look for those greater run opportunities. And that's just, like I said, something that I'm focusing on this year that will allow me, as a major goal of mine, to really allow me to increase my profits. So I don't want to keep running. I just want to kind of show you guys that and what my aim, what my focus was on moving forward. Okay. I'm not saying I won't take little micro scalps here and there, whatever the case is, but that's just something I'm working on this year as well. That will also allow me to downsize and eliminate having to take as many trades as well, which helps you as far as when it comes to commission too, because then you don't have to pay as much a commission, right? All right, so that's all I have for you guys today. I appreciate everyone tuning in And if you're interested in joining our Discord community, you can find that link down in the description portion of the video. I will show you our Discord right quick. We have, I think, approaching about 800 members. I know I say this in each and every video, but the more I do so, the more the community continues to grow. We have basically two channels here. The trading floor is where you know, we as traders come together. Futures Traders, this is the Futures Trading channel. So if you trade futures and you're interested in joining our trading floor on the server or the Discord server, please find the link down in the description portion of the video. This is the channel to where we, you know, we talk about levels and zones, or discuss our levels and zones, and a lot of us share our trade entries. We put them out there, whatever the case is. A lot of traders do during the trade session, and just a means of what I find that other traders, you know, they ask other traders, hey, why did you take that trade at that particular level or zone? And somebody's going to answer that question, you know, and maybe help you clarify or get some understanding of opportunities that may help you out in your own trading, okay? But we also have the general chat channel too. The general chat channel is designed for question and answering, pretty much. If you have questions, or maybe you're a new trader that's interested in asking certain questions about the future markets, whatever the case is, or anything pertaining to the future markets, you know, you can ask it on the general chat side. But outside of that, that's all I have for you guys in today's video. I appreciate everyone tuning in. Please take the time, if you're a first-time viewer, to click on the subscribe button down below. There are loads of videos here on the channel that talk about, where I discuss the strategy that I use, especially for those individuals who are entry-level, beginner, or new traders. Okay, a strategy I talk about in detail about using pair charts and how it works and how you can scalp the market each and every day to make your own profits. Okay, so also please make sure to click on the bell, turn your post notifications on to make sure you never miss one of the uploads here on the channel. And I am gone, and we'll see you guys in the next video.